Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. The world is a little bit of a mess at the moment, certainly at the time of recording anyway, and because it's a mess, the markets are a mess. There's markets that are up, there's markets that are down, and there are people that are worried. So in this episode, as well as bringing you all the property updates, we're going to address what's happening in the world markets and give you our point of view.
Welcome to the Property Podcast. Thanks for joining us. Rob and I advise a multi-million pound property fund. That's what we spend our week doing. You can find out more about that at portfolio.co.uk. And we put together hundreds of transactions over the years. And this is the show where we take a bit of time out of our week to bring you the knowledge that we've gained along the way for free. Today, it's our market update. So much news that we're going to bring your way and summarise for you. And make sure you stick around to the end for Hub Extra, where we've got a new tech tool to share with you.
A bit of an exciting update with Portfolio now. And we're going to be a bit of a tease here, but you know what? We're going to give you enough information to make it useful. Portfolio, our mission is to bring that app to as many people as possible. And to do that, we need to lower the investment amounts. Now, some of you may or may not be aware that the minimum investment amount at the moment on Portfolio is £10,000. And there's a number of reasons why that's the case. But we've jumped a lot of the hurdles needed to start lowering that amount. And in the next week or two, we'll hopefully be able to make an announcement about that number coming down. So if you've been interested in Portfolio from what we've discussed and what you've seen, and you haven't signed up to the waiting list yet, head over to portfolio.co.uk, join the waiting list to make sure you're notified of that change, because it's a big milestone. And we're really happy. I know it sounds not a big thing, just lowering the investment amount, but actually a lot of work has to go in to deliver that. And we are going to deliver that very soon. So make sure you check out the waiting list if you want to hear more and be notified when that happens.
Yes, indeed. And because a lot of work does go into everything to do with Portfolio, we are hiring. We've talked about this recently on the podcast. We said how we were on the hunt for a CTO. And off the back of that, we've had a couple of really interesting conversations. The podcast audience always delivers. So that's really cool, but we are still on the lookout. And we've got lots of jobs currently advertised across Property Hub as a whole. So go to propertyhub.net/jobs and see if there's anything that takes your fancy.
So it's time for our market update. And let's face it, there's no hiding from it. The news is absolutely dominated by events in Ukraine. And we're not going to go near there because we're not experts. There's so many things to consider. It's just really horrible what's happening. And hopefully we can brighten your day up. We're talking about other things that are going on in the world, and especially in the world of property. But with world events playing out like they are, it means that markets are impacted as well. And oil is up, gold is up, stocks have been down. There's loads going on, Rob, from a finance point of view. And yes, this is nowhere near as important as the other stuff that's happening, but it does impact us all. And there's not a lot of commentary on it. So we're going to change that and talk about it.
Yeah, one of the things I say a lot is that one of the good things about being invested in residential property is that you can't see the price of it change minute to minute. It's kind of better for your sanity that way, because markets have been all over the place as a result of what's going on. Most stock markets are down. Most of everything is down, and bonds are up slightly. Gold is doing what it should be doing and being a bit of a hedge, although it hasn't exactly rocketed. So pretty much whatever your portfolio looks like, it's going to be down over the last month. You would have needed to have a pretty bizarre portfolio to be in a position where you were up, or have incredible foresight about what was going to happen in Ukraine. But Rob, I think that's worth acknowledging and touching on, because a lot of people will be feeling bad and worried about their investments over the last few weeks. But really, unless you're just about to buy an annuity because you've just retired or whatever, people's concern over this is misguided, shall we say?
Or daft. You're very polite. It's daft. It's silly. Think about it. Okay, so somebody contacted me last week and said it's a dark day for the stocks. And I was like, it's a dark day? I said, if anything, it's a great day because you can buy everything cheaper. On the month, Taylor Wimpey, for example, is about 7% down. Do you think Taylor Wimpey are going to sell less houses this year? No, I don't think so. That's not investment advice. I'm just giving an example. Yes, of course, if a nuclear bomb hits the UK, then we'll sell less of everything, but probably won't be here to be concerned. A little bit dark, but it's unlikely to happen. And if it does, well, there we go. None of this is actually that important. But you have to operate like the world will carry on spinning and things will carry on. And if that's the case, then Tesco's will probably sell as much milk and bread Taylor Wimpey this year will probably sell as many houses as they were going to anyway. And everything, at least for a few days, let's see what happens, has been discounted. Now, what about the people who are holding and go, yeah, that's fine, but what about my stocks? You know, they're down 5-7%. Well, unless today's the day you decide to sell everything, it doesn't matter. And you're right, Rob, that's a great thing about property, is people can't become as obsessed with what the price is today. It's just what the price is when it means something to them. And that's normally if they want to remortgage to release equity or sell. But other than that, it doesn't really matter until it becomes an important time for you to take action. But unless you were planning to sell a lot of stocks this month, then it doesn't make a slight bit of difference that the markets are down 5 or 7%. I've got a bit of a gold holding and a little bit of oil as well, actually. Very minute, nothing meaningful. But I'm not exactly going mad and thinking I've made it because I've got a few of those. I've got the stuff that's down. Overall, do I care? No. That makes no difference. But I care enough to talk about it because I know for some reason people let this get in their heads. And it's wrong. Do not let what's happening in the market right now get in your head, because it's not going to make any difference you worrying about it, you thinking about it. You can't worry the stocks back up. It's not going to happen. So you may as well not worry. Just forget about it and stop looking. And delete all those notifications off your phone if it's causing you that much stress. And only look when you either need to take action or you just want to do a review. But you don't need to do a daily review. That's not healthy.
It's really not. But something else that I think has been really interesting over this year so far is Bitcoin. Bitcoin's always fascinating, to me at least. And when we've talked about Bitcoin in the past, we've talked about it as digital gold. In terms of the way it's been designed, it's meant to mimic the characteristics of gold. So in theory, you would think that it would behave in the same way as gold, as in being a hedge against the stock market falling. It should behave in the same way as gold, which is up slightly. But this year, Bitcoin has demonstrated that it's a long way from doing that. Bitcoin is a risk asset. We saw this in January when the Nasdaq sold off and Bitcoin went down with it. Why should it be correlated to growth stocks? It shouldn't, but it clearly is. And then we've seen it again with the outbreak of war in the Ukraine when Bitcoin has followed the markets down. So I think this is really interesting because it kind of shows you where Bitcoin should fit into your portfolio right now, if at all. It clearly is a risk asset. Will it ever get to the point of being digital gold? It's possible that when the market matures enough, if it gets widespread enough usage, then it could do. But we couldn't have seen a better demonstration over a short period of time in 2022 so far that currently that is not what it's doing.
It's really interesting you say if the market matures, and matures is an interesting word. Could it be the lack of maturity of the people who engage with Bitcoin? So probably it's fair to say that the people who invest in Bitcoin will be a lower age than on average than people invest in gold. An older, wiser money has previously operated by when times of uncertainty move into gold. Maybe because it's a younger crowd with Bitcoin, they're just doing what people in stocks are doing and panicking and just making rash decisions and going, oh, things are bad, let's take my money out. Can't prove any of that, but it's interesting to think about who invests in Bitcoin, who invests in gold. And maybe that demographic difference is why, or at least one of the reasons why Bitcoin is behaving the way it is.
I think that's pretty likely, and tied into that, you get a lot of leveraged trading activity on Bitcoin because it's easy for retail traders to do, which means that if the price starts falling, those people can start getting margin calls and getting liquidated, which pushes the price down further and further. Those same people are not doing that on gold. There's not many amateur traders in their 20s who've got leveraged positions on gold futures. It's just not a thing. So I think that's another angle or factor playing into why you're probably right about that. So will that change if the trend of more institutions getting into Bitcoin carries on? There's a chance that it will do, but there is obviously a long way to go.
But it's interesting though, because I don't hold any Bitcoin currently. I have previously, I have dabbled. And at the moment, because everyone's so negative again and because it's so down, it's actually becoming interesting to me again. I'm not going to do anything meaningful. Won't be a huge, big mover and shaker play. If I do anything, it'll just be a small amount. But with nearly every asset class, I'm most interested when people are less interested, and that goes for areas in the UK when we talk about property, like what are people not talking about right now? That's interesting to me as an investor. And I think it's the same with any asset class, including Bitcoin. Although I will say this, a friend messaged me recently and he said, how much do you think I should invest in Bitcoin? Out of the blue, I hadn't said anything to him about Bitcoin. And I said, well, how much can you afford to lose? And I think with Bitcoin, you have to take that viewpoint and you have to accept it as a very risky investment play investment, I use the word loosely, gamble if you're going to go in to Bitcoin, because it's just all over the place. So it's fascinating to watch all these markets operate, some up, some down, some not behaving as we'd expect. But I think these times of turbulence, I think there's a lot of lessons that can be taken as well. And that moves us nicely into property, Rob, and the lessons we can learn from the property market. Because one of the things you've already said, and we've talked about a little bit already, is that you can't see the daily movements in property prices and the data lags. But we have the latest data on house prices, which took us up to the end of 2021 from the Land Registry. And that shows that house prices were up 10.8% by the end of 2021. Staggering.
It really is. And I know this data is a little bit old now because it was a couple of months ago. And we normally use the nationwide index, among others, because they get the data earlier. But the Land Registry because the reason it's lagging is you have to wait for the transactions to actually be recorded. So it's as official as data gets. So this is the answer for what happened to house prices in 2021. They went up by 10.8%. That's just crazy. It's so nuts. We've already said that we think that the boom will continue, but not necessarily that extreme rate of growth will continue. We made our predictions at the start of the year. We'll see in December how they hold up. But 10.8% for last year is crazy. And even in London, which performed worse than practically anywhere else, prices are still up 5.5%. And if I'd been offered 5.5% growth in my London properties at the start of the year, I absolutely would have taken it. So really, this news story doesn't come as a surprise. It's not a surprise, yet I still can't help but be a bit shocked every time I see that figure.
Well, let's carry on that trend, or at least attempt to, of having you shocked by numbers, Rob, because I've got some big numbers for you now in our next news story, which the headline reads, Huge Build-to-Rent Programme Announced by Pension Provider. And we've talked a lot in the past about how big institutions are coming in to buy-to-let and really trying to professionalise the industry, be real competition for the traditional landlord, because they see the benefits in property. And they're not exactly going into it small. Bear in mind, this is one pension provider I'm going to talk about now, and it's Legal & General. And Legal & General's retirement division has just announced that they're planning to deliver as many as 7,000 build-to-rent homes across the country by 2027. And that's a 2.5 billion investment. Now, 7,000, that's a small town, and that's in the next 5 years. That same division already invested 500 million last year. But that's just the retirement division. In the standard build-to-let, the residential market, they've already invested another 2.5 billion, with 2,700 apartments already operational. But they've got another 6,000 under construction. So taking it to nearly 9,000 in that department. So across those departments, it's nearly 17,000 build-to-rent properties. Just massive numbers. And Rob, that's not the sector. That's one pension provider.
Yeah, one of the biggest, but still just one company. And we've reported in the past about others who are doing similar, and even companies who are entirely different sectors, like John Lewis starting to get in on the act as well. And I think it's both a huge number and a tiny number at the same time. So in terms of the amount of money being invested, especially in the context of one company doing it and the space of time that they're doing it in and the commitment they're making, it's a huge number. But at the same time, 7,000 new homes over 5 years is a drop in the ocean in terms of how much of the overall rental market that will make up. So as we've said when we talked about this before, I don't think build to rent is suddenly going to push all landlords out of the sector. It's only making any difference on the margin. But clearly it is a trend that is growing, it's accelerating, and it is something that landlords need to be aware of, because when we started talking about this years ago, it was like really tiny, hardly anything going on. But it's on its way to becoming something quite significant.
Something else that feels significant to any investor is mortgages and having to pay those mortgages. And at the moment, the rates on all fixed products in pretty much every category have been going up recently. And that's understandable because interest rates have gone up and the expectation is they will probably go up further. And that could be worrying as a headline, but I just want to pick out a number here, because all the rates in this article, which comes from mortgagestrategy.co.uk, all the products are going up, and all are based on residential, not buy-to-let. But buy-to-let tends to follow the same way and the same path. But if we look at 5-year fixes, this could be seen to be quite grim. I've missed a boat, I should have got a mortgage a couple of months back, whatever. But a 5-year fix at the moment, which I think is an interesting product for any homeowner, depending on what you're planning to do. A 60% loan to value. The average product moved by 5 basis points, but it moved to 2.23%. So you can get a 5-year fix at 2.2%. That's the average. So you can do better than that. That's crazy. Let's not forget and become blasé with how low the rates are on these products. I'd also be super keen to have a look at 10-year fixes while they're this low as well, especially with everything that's going on in the world. So, yeah, crazy low numbers. Yes, rates are going up, but we have to remember they're going up from historic lows, and competition will drive these rates probably back down again as well, even as interest rates go up. And the other thing we have to remember is competition may see some of these products start to move back down again as well. All the mortgage companies, all the mortgage providers react when there's interest rate movements, but then competition can erode those margins that they're working with because they don't want to lose the business. So you may see news stories around interest rates and therefore mortgage products being offered going up, but it's not that bad. And actually, it's still really, really cheap to borrow money.
We've talked about house prices, but what about the rental market? Because that's the other side of things that we're interested in. And the good news for investors there is that there's a story saying there's no sign of rental demand slowing. And that's according to a survey from the NRLA, who I wish would change their name because it's so difficult to say and it nearly trips me up every time we record this podcast. But the point is that they are showing rental demand being up pretty much across the board. And this is borne out by just the stories I'm hearing as I go about my everyday life. And of course, people do tend to talk about property around me quite a lot. But even in London, which we've said is bouncing back, having been affected negatively by the pandemic, we said that the market is coming back. It seems to have massively come back. So many people are saying about what a hard time they're finding it to rent in London, because not only are rents going up so much, but also there's just so much competition. Rental supply in London seems to be really low. And so even if you're willing to pay whatever the rent is, just getting a viewing on something is really difficult. And that's something I'm hearing all over the place. So my kind of anecdotes are for London specifically, but this data suggests that this is either happening all over the UK, or if it's not happening yet, is on its way to happening because rental demand is only on the rise.
Our next news story says, avoid rent freezes, but some controls can work, claim academics. Now, the news story here for me, Rob, is not that academics have put a 68-page report on rent controls, but actually, you've told me you're going to read it and you're going to report back on what it actually says. Unfortunately, the article doesn't really go on to tell us what the report says, but you can find that report on Letting Agent Today if you want. There's a link to it and you can read that report for yourself. But if you're feeling a little lazy like I am, you can get Rob D to do it for you.
How long have you known me for? I can't believe you're surprised that's something I'm going to do. But I am, and depending on how interesting it is to a general audience, not just to me, because I find it fascinating, we will either turn it into a full episode or we will talk about it on a forthcoming market update.
Okay, we're going to please some people now, Rob. We're going to talk about the people north of the wall, Adrian's Wall, Scotland. And there's a couple of quick news updates for our Scottish listeners or anybody who wants to invest in Scotland.
Yes, the first of those stories is specific to Edinburgh and specific to holiday lets in Edinburgh, which is a policy that will need planning consent to start offering Airbnb accommodation in Edinburgh. That's not been ratified yet, but it looks like it will be. And it means that you'll need to apply for change of use. The reason for that is that there are so many Airbnbs in Edinburgh. Obvious why that's the case. Edinburgh is a great city. It's a great place to visit. It's got the festival. It's got everything else. And so there's a lot of demand for Airbnbs and therefore a lot of supply being created. But it's causing issues for residents of the city in the same way as we've reported on for residents in nice rural or coastal areas of England. Lots of people finding it hard to find rental accommodation because so much of it is being taken up by Airbnbs. So it'll be interesting to keep an eye on that one because we'll see if it makes a positive difference for the city as a whole. And if it does, then that might be copied by other areas. The second story that you mentioned is that Scots landlords are dismayed, according to the headline at least, as possession grounds are being kept discretionary until September. So in Scotland, like in England, the notice periods that needed to give for evictions were increased as a result of COVID, and also, like in England, have come back down again. But in Scotland, until the end of September, at least, those grounds are remaining as discretionary, whereas they're normally compulsory, meaning that the courts can decide not to grant a landlord possession, even if they normally would. And the article is making a point that this is unreasonable, and it's kind of a political point using COVID as cover, and I think that's probably fair. It's kind of hard to see the justification for this now in the same way as you could have seen the justification for it a year ago. But I think it's certainly fair to say that government in Scotland is not landlord friendly at all. There are more proposals around rent controls and restrictions and things like that going through at the moment. And that seems to be just another facet of that.
Well, I thought we'd be pleasing our Scottish listeners with a few news stories there, Rob, but it doesn't sound that positive. So let's end on a lighter note, and they can all laugh at the London property market, all our Scottish listeners, because our last story we've taken from The Guardian, and London's smallest microflat sells for 80% above asking price, reads the headline. And this is a story about a microflat, in fact, the smallest microflat ever sold in London, which was at auction for a minimum of £50,000, but sold for £90,000. Previously been rent for £800 a month, which is stunning on both the price that's been paid and the amount for rent, because this is one way you're going to have to turn to our social media platforms. Go to Property Hub UK on either Insta or Facebook, probably best place to show you the photos of this one, because my word, when I was younger, I've stayed in hostels, I've stayed in some very basic hotels previously. But if this was a hotel room, Rob, and it's not, it's a place for someone to live. If it was rubbish, like this is a cupboard. This is a cupboard with a little bed put inside it and a toilet. It's awful. I can't believe that someone has actually had the audacity to turn it into a property. And you know what? Fair play to them. They've sold it for a good chunk of money. Part of me thinks this has got to be like someone's had a bet and went, I could sell that as an apartment. So the other person's gone, no, you can't. And he's like, watch me. Like, I can't believe someone's actually thought of turning this into a property, but they have. It's a visual one. So check out Property Hub UK, but it's bonkers, isn't it?
Well, yes, clearly. And it is indication that the world has gone mad, and London in particular, etc., etc. But apparently, this is even madder. It has previously rented for £800 a month. So this will definitely cheer up anyone who doesn't live in London, because £800 in many parts of the country would get you a really lovely house to yourself with a garden and everything. But this flat, you're paying £800 a month for 7 square metres. But as the buyer who bought this at auction, if they can achieve that, they're getting more than a 10% yield. So they won't be able to use leverage, unfortunately. I don't think you'd be able to get a mortgage on somewhere like this. You certainly shouldn't be able to. But even unleveraged, they're doing all right. So financially, actually not a bad investment. But in every other possible way, this is so grim. You really do have to go and look at the photos.
Yeah, I mean, if I put my investor hat on, you could say, well, maintenance will be cheap because there's not a lot to maintain. And maybe its notoriety of being the smallest property in London will add to its value as well. I mean, you could probably build an investment case for it, but I don't want to. It's actually sad that I thought of anybody living there. I hope it's just somebody uses it as a crash pad. I mean, it does have a window, so that's a positive, but it looks out to a wall. But on the plus side again, if you're the letting agent, the viewing ain't going to take a long time. So go and check it out on our social media platforms and judge for yourself and leave a comment on what you think about this property.
So that's your market update. Lots going on, a bit of a mixed bag. Let us know what you think. We would love to hear from you on the socials. We're Property Hub UK. But before we leave you to do that, it's time for Hub Extra, that part of the show where we give you a little bit more. We sneak in a bit more value before we finish, whether it's a book or a quote, a life hack, or anything else that we think might make your life a bit better. And we back it up with a Hub Extra email that lands in the inbox of Property Hub members bright and early every Friday morning. And this week, Rob, we're sharing a tech tool that we actually use to put this podcast together.
Yes, people love this type of information because it's what we use to run the podcast. It's how we put the show together. It's where all our notes are collected, where we schedule everything, where we leave progress updates on where the episode's up to, so whether it's recorded, edited, all that type of stuff, and much, much more. What am I talking about? I'm talking about Monday.com. Monday.com. It's a bit hard to describe. It's like a planning tool / to-do list / other bits and pieces all wrapped up into one. What I like about it is it's super visual, so it's very easy to find information, look at where you're up to. Basically, if you're running any type of project, whether it's a one-off project or an ongoing project like the Property Podcast, then it's well worth a look. There are other tools out there as well that could work for you, like Asana and Trello. And we still use Trello a bit, and we used to use it heavily in the past. That's probably a bit more of a basic one. So if it's a project just for you and just for your properties, then check out Trello. But if you're kind of really taking property on in a big way and you've got lots of things going on, I'm sure Monday.com could be really useful for you. Or if you want to start a podcast, Monday.com could be a really good way to organize yourself. As normal, there's no affiliate programs here. They're not paying us. It's just a recommendation. People love to know what we use day to day. So here's a share that hopefully you'll enjoy.
Well, that is us done for this week. Thank you so much for joining us. We always appreciate your company. And of course, we're going to come back and do it again next week. We always do. And next week, we've got some other members of the Property Hub team joining us on the podcast. So do make sure you're with us for that one. And remember, we mentioned Portfolio earlier. If you would like to know more about what that's all about, you can find out more at portfolio.co.uk. But for today, though, that's us done. We'll see you soon. Bye-bye.
Bye-bye.